Hello and welcome. You tuned into Market Fatafat with me, Ankita Saxena, and with me as always is Snehi Shah. And this is the show where we take you through all the buzzers in trade, either on the back of news flow or on the back of their technical charts. But first up, let's take stock of how the markets are shaping up. A bit of recovery coming in since yesterday, but if you look at the Nifty, it is very, very sideways. We are still holding on to this 22,000 levels, but we are literally very, very, very flat, very range-bound moves coming in on the Nifty. Nifty Bank is a different story. We are posing a bigger recovery on Nifty Bank. In the broader markets also, some bit of a recovery coming in since yesterday at least.
Absolutely, that's to sum it up. Basically, in a nutshell, that's what the markets are doing right now. We are sideways nonetheless on the market, but we are above the 22,000 mark. Remember, we had opened below the 22,000 mark near the 21,900 level, so that was not looking very promising for our markets today. Nonetheless, it's a 100-point recovery coming in from the day's lowest point, but we continue to trade in the red. 22,050 thereabouts is where we are at on the market right now. Sensex also 0.2% cut, 70,900, very close to 73,000 mark on the Sensex. India Wix is down by 0.7%, no complaints over there. Nifty Bank is looking very good right now. There's been a recovery and a 0.4% uptick is where the Nifty Bank is right now. So that's something that is doing well in today's trade. Advance decline ratio very nominally in the favor of the advances today, but that's a happy change to see compared to the last couple of trading sessions that we have been seeing on the street. Broader markets, let's pull up that because the Nifty Midcap continues to trade in tandem with the benchmarks. A 0.4% cut coming in on the Nifty Midcap index. However, the small cap end of the market is in the green. There has been a bit of a cut coming in from the highest point of the trading day on the small cap index as well, but in the green nonetheless. Media, PSU, bank, energy and services are the only sectors in the green. On the flip side, auto is your biggest loser today, followed by IT, FMCG, pharma and realty. So that's what the market construct is shaping up to be like right now.
All right, then let's get started with all the buzzers in trade today. And for that, we have Osho Krishan, who's a senior analyst, technical and derivative research from Angel One. And from our research team, we're joined by Rabinder. Hi, good afternoon to both of you. Thank you so much for joining us. Well, let's get started with all the stocks that are in focus today. First up is Balkrishna Industries. That's in focus on the back of a brokerage note. Nuvama has come out with a note and they are maintaining a buy target, but they've cut the target price to 3,100 rupees from an earlier 3,300 rupees. On the back of the target price cut, we can see Balkrishna Industries reeling under pressure with cuts of 3%. Now they feel that after they had the analyst meet at the Bhuj plant, Nuvama feels that the plant has a capacity of 1,95,000 TPA and they have a surplus space for another 1,50,000 to 2 lakh TPA. Now the new capacity of 35,000 TPA at the Bhuj plant is likely to be operational by FY26, and also the revenue advanced carbon black plant having a 30,000 TPA is likely to be around 5 billion rupees in the next 2 years. Now the medium term global market share target remains to be 10% versus the earlier 6 to 7%, which is currently. Now the near-term outlook is rather subdued due to the weak European and US demand, but the market share it's likely to continue. And they've also trimmed the FY26 estimate and FY27 estimate EBITDA by 3% each, factoring in the lower revenue assumptions. And for FY25 to 27 estimate, they're building the revenue and EPS CAGR of 9% and 11% respectively. On the back of the target price cut, we can see Balkrishna and Industries reeling under pressure.
Okay, so that's a cut coming in on that stock. Let's move on and coming to you now, Osho. You picked out Bharti Airtel for us on the charts. Last 6 months, very flattish move. Last 1 month, the stock is lower by 5%. Last 1 year, the stock is doing decent, somewhere between 38 and 40% gains coming in over the last 1 year. What's the outlook on the charts going ahead, and do you believe that this flattishness that we've seen could pan out into recovery going ahead on the charts?
Very good afternoon to both of you. Well, looking at the technical perspective of Bharti Airtel, then we have seen a decent correction from the zone of nearly 1730 towards the zone of 1570 now, which is also the 200-day simple moving average. So I'm expecting that looking at the historical support zone, the counter has seen a very decent consolidation around the levels of 1600, 1590 odd levels. So I'm expecting that looking at the recent traction that it has seen a very strong plunge from the zone of 1660 in the last 3 trading sessions. So I'm expecting that there is a possibility of a breather in this counter and one can witness a kind of a bounce back towards the zone of 1620, 1640 on a very short-term perspective. And once it breaches the zone of 1640, then we can again witness another set of rally towards 1720 odd levels. So I'm expecting that from here onwards, the downside is very limited to this counter as it is hovering near the 200-day simple moving average, and one can definitely try to accumulate it for a higher target of nearly 1720 from a short to medium term perspective.
Okay, so that's Osho's outlook on Bharti Airtel. Let's move on and talk about the biggest nifty gainer in today's trading session, and that's SBI on the back of a double upgrade coming in on Citi, because they have double upgraded the stock to a buy rating from a sell earlier and also hiked the target price to 830 rupees per share compared to 720. The management outlined multiple liability cost optimization initiatives and yield levers is what Citi is liking. They also marked that there are relatively lower EBLR loans, that's roughly only 28%. The MCLR hike repricing should protect the NIMs on the downside as well. That's yet another positive. And growth visibility is backed by express credit traction, robust corporate pipeline, accelerated HL rollout, etc. Now, unsecured retail slippages are contained at just 0.5%. The SMA2 pool is also reined in, and credit costs could be curtailed going ahead as well. The restoration of risk weights on NBFC lending to boost CET1 by 25 to 30 bips could also pan out going ahead, and weak market sentiments allay near-term equity raise overhang. That's something that Citi is cautious about. But on the valuations front, they believe that the valuations are expensive compared to the rest of the street right now, given where the company's loan book is at. On the back of this positive news flow, a double upgrade coming in on Citi and a price hike, SBI is up 2.6% and is lending some support to the street as we speak.
All right, moving on then to Bharat Dynamics. Now, Osho, tell us now, these counters, these PSU counters have corrected fair bit, in the last 1 odd year. In fact, last, 6 odd months, it has, corrected 22 odd percent. But today it has, really started moving up. 5% gains coming on Bharat Dynamics. Tell us what you see on the charts from here. Or do you see a breakout happening?
See, overall, Bharat Dynamics has been into a corrective phase, but in the month of November last year, 24, we have seen it taking a support around the zone of 900, and from there onwards, again, there has been a short-term rally that can be seen in this counter. Again, in the last 2 trading sessions, the counter have retested the same support zone of 900, and in today's trading session, there has been again buying emergence in this counter. So overall, looking at the historical trend, I am expecting that there is a possibility for this counter to have a kind of a pullback rally towards the zone of 1200, 1250 in a very short-term perspective. But on the higher end, the conviction for a trend reversal will come only once it surpasses the zone of 200, the simple moving average, which is approximately around the zone of 1250 odd levels. But for short-term perspective, yes, one can expect a decent rally around the zone of 1200, keeping a stop loss of 900, which historically has also proved to be a very strong support for this counter.
Okay, so that's the take from Osho on Bharat Dynamics. Moving on, Ravinder, coming to you, you've picked out Varun Beverages for us, a very positive brokerage note coming in on this stock, and tell us what it's about.
Well, yes, CLSA has come out with the note on Varun Beverages, where they have upgraded the stock to high conviction outperform from outperform, though they have lowered its target price to 770 from 802. The stock has declined 28% in past 3 months, with its 12-month forward PE ratio dropping to 62.8% to 43.8 times. And the concern arises from the growing competition, especially from Campa Cola's ₹10 offering, along with the Coca-Cola's restructuring of its bottling businesses. Additionally, higher capital expenditure and worries over slowing urban consumption in India has weighed on sentiment. However, CLSA believe investor concerns are overblown and presenting an opportunity for long-term growth. And back on this brokerage note, stock is up over more than 4%.
All right, that's Varun Beverages on the charts on the back of that note. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back with some more buzzers on the other side. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus, and a good move coming in on Sudarshan Chemicals in today's trading session on the back of the news flow that the company's subsidiary Sudarshan Europe BV has finalized the acquisition of Germany-based UBEC Group through an asset and share transaction. Now, through this strategic acquisition, SCIL's operations and experience are combined with UBEC's technological capabilities to create a global leader in pigments. It will expand the company's product line and provide it with access to a diverse asset base spread over 19 foreign locations. The merged business will be well represented in important regions such as Europe, America, and will provide a wide range of high-quality pigment products. It's a very positive news flow coming in. They've added another segment to their portfolio, which is pigments, in which UBEC Colorants is a very big player globally as well. And this is the UBEC Group entirely that has been acquired by Sudarshan Chemical. Very positive news flow coming in. in. The stock is almost at almost at the day's highest point, just slightly lower than that, but nonetheless a healthy 2.5% uptick coming in on the stock today.
All right, moving on to the next counter, which is Gland Pharma. Now, this is in focus on the back of a note by Citi, and this is after its analyst meet. Now, they're maintaining a sell with a target price of 1,420 on Gland Pharma. Now, Citi says that the company was quite upbeat on the GLP-1 fill finish potential and is expanding the cartridge capacity from 40M to 140 by this year end. Now, to unlock the value, the company is now going to have a deeper focus in the non-US markets while expanding the portfolio in the US through in-house as well as R&D collaborations. And Cenexi is mainly having supply side challenges, which is rather than a demand side challenges, which the company is trying to resolve sooner than later. But nonetheless, Citi is maintaining a sell on Gland Pharma. On the back of that, you can see Citi declining in trade today. In fact, it is trading at the day's lowest point with cuts of almost 1% in trade.
Okay, so that's a cut coming in on Gland Pharma. Let's keep it going with this pharma team. And Ravinder, you've taken Zydus Life Sciences for us. Tell us what the news flow is here.
Well, Zydus Life Sciences is in focus, where Zydus Life Sciences Limited, an innovation-led global life science company, announced its focus on development of combination vaccine against typhoid and Shigella, and the combination vaccine being developed for the first time in world underscores India's innovation capabilities with the potential to provide protection against deadly enteric disease, typhoid and Shigella. And Zydus will carry out early stage development, animal immunogenicity studies and regulatory preclinical toxicology studies for the combination vaccine. And the project is expected to get underway in March 2025 and being supported by the Gates Foundation.
Okay, so that's the reason why Zydus Life is in focus in today's trading session. Let's move on and talk about a stock that's seeing cuts today, and that's Titan on the back of a note coming in from Macquarie. While on one hand they have maintained their outperform rating, but on the other side they have cut the target price to 4,000 rupees now, which is a cut of 4% compared to their earlier target price. Titan is their preferred pick in the consumer space. They also say that the rise in gold lease costs for smaller players will see Titan's competitiveness rising. Lab-grown diamonds should not be of material concern to the company. They have also cut the FY25 and FY27 EPS by 3 to 4% due to higher lease costs and Trump's tariff and near-term impact on jewelry demand due to higher gold prices. So it's a balanced note coming in from Macquarie. It's got a fair share of positives and negatives, but the street seems to be focusing on the negatives, which is a cut in the EPS estimate as well as a 4% cut in the target price to 4,000 rupees per share now. And although they have maintained the outperform rating, there's a 2% cut on the stock coming in today's trade.
All right, that's Titan in focus on the back of that. But let's move on and let's go across to other set of counters. Moving on to Pharma Pack, which is in focus today on the back of a note coming in by Jefferies on Indian Pharma. In fact, let's take a look at what the note has to say. Now, this is on the generic monthly tracker. The Indian firms increased selling of the G Revlimid versus the previous quarter. The Zydus has entered the G Vascepa market that has gained 1% market share to begin with. Lupin and Zydus continue to gain market share in the Mirabegron, and as far as Zydus is concerned, the share in the Ascol HD continues to decline in the Teva gains. As far as Cipla is concerned, Cipla has lost almost 280 basis points market share in the albuterol inhaler, and Lupin begins to gain further market share in the G Spiriva after a month of hiatus. And on the back of that, Cipla is in focus, Lupin is in focus, so is Zydus. In fact, Cipla is down almost 1% on the back of losing that market share. Lupin is also trading with cuts of 0.4% as of now.
Okay, so not looking for these couple of pharma names trading with cuts all across. But on that note, then we'll wrap it up on this edition of Market Fatafat. Ravinder and Osho, thank you so much for joining us on the show. That's the last stock we wish to highlight. It's a goodbye from Ankita and me, but you stay tuned to ET Now for more market updates.
If you like this video, then like, share and subscribe to ET Now.